Ladies and gentlemen, on behalf of Captify Consulting Investor Relations team, I welcome you all to the Q2 and H1 FY26 post-earnings conference call of Menon Bearings Limited. Today on the call from the management team we have with us Mr. Arun Aradhya, whole-time director and CFO, and Mr. Aditya Menon, who's a part of the promoter group. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to brief us about the business and performance highlights for the period ended September 2025, the growth plans and vision for the coming year, post which we will open the floor for Q&A. Over to you, sir.
Okay, thank you, Mr. Vinay. So, good afternoon, everyone, and I wish you all the best for the next year, that is Samvati year. I hope you must have enjoyed the Diwali vacation. And now I will start with my opening remarks. So it's my pleasure to welcome you all to the Menon Bearings Investor Concall for the second quarter and half year ended September 30th, 2025. So thank you for joining us today and for your continued interest in the company. We are pleased to report that Menon Bearings has delivered another quarter of consistent performance, backed by steady demand across domestic and export markets, along with strong operational discipline. During the quarter, revenue stood at 63.85 crore, a growth of about 7% year on year, while EBITDA was rupees 11.1 crore and PAT stood at 6.8 crore, reflecting 18% growth in H1 FY26 over the same period last year. EBITDA margins for the half year stood at 18.8%, while PAT margins improved to 11.6%. Our bimetal division continues to be the major contributor, supported by increasing demand for large diameter bearings and new product development. The Alcop division also showed healthy growth, driven by export orders, and the brake division maintained stability with aftermarket and OEM demand. We continue to innovate in our capacity expansion plans. Bimetal capacity will rise from 486 to 530 lakh units. Alcop can anytime double the capacity from 4940 tons to 2880 metric tons, and the brake division will scale up from 18 to 24 lakh pieces over the next 2 years. These expansions are strategically aligned to capture the growing domestic and international opportunities, with a total planned capex of about 25 to 30 crores. On the sustainability front, we have implemented a 570 kW solar power system and the several energy efficient measures that will reduce long-term cost and carbon footprint, reflecting our strong commitment to ESG practices. Apart from that, we'll be installing solar panels, rooftop solar panels, and with a capacity of 2.5 megawatt, and that is being completed within a period of a couple of months from now. So that will definitely benefit us so far as electricity consumption and expenses thereof are concerned. Looking ahead, we remain optimistic about growth prospects. We already entered into the EV component segment through Eaton for supply to Porsche, and expect that EV business to contribute 8 to 10% of Alcop revenue by FY27. Exports currently account for around 30% of total revenue, or little more than that, and that is being increased up to 35% by the end of this year, considering the export orders that we are already having in hand, and are projected to reach 40% by FY27, mostly between 35 to 40%, led by strong traction from the US and emerging African markets. With virtually debt-free balance sheet, strong order book, and robust customer relationship, Menon Bearing is well positioned for sustainable, profitable growth in the year ahead. Apart from that, what I would like to tell you that, considering the business that we have already started with one of the prominent USA customer, that is Allison, which we have already started from the last month, which is to the tune of 2.5, more than 2.5 crores a month in bimetal division. Apart from that, additional orders of around 3 crores by the which will be productionized by January 2026, coupled with increase in the production capacity and order book position of Alcop, the parts in respect of John Deere and other customers, which are more than 51, which have been already tested, samples have been tested, and those will be all productionized by the fourth quarter of this year. So considering that, we are absolutely sure that we should be reaching to almost on a consolidated basis to the tune of more than 280 crores to 290 crores in between somewhere by the end of this year, with 18 to 20% increase in the next year, considering the business that we have already secured. So thank you, and we once again thank you for joining. We now look forward to addressing your questions. Thank you once again.
Thank you, sir. We'll start the question and answer sessions. Anybody who wishes to ask a question, please use the option of raise hand, or you can ask, or you can put your questions in the chat box also. We'll take the first question from Bhargav Buddhadev. Please go ahead.
Yeah, good afternoon, sir.
Yeah, good afternoon.
Am I audible?
Yes. Very much.
Yes, sir. My first question is that if you look at your export growth this quarter, it has been a fairly strong performance led by Alcop. So, given the several headwinds which are there in the export market, especially given the fact that we are increasing our exposure to US, where there is a tariff, if you can give some thoughts that post the tariff scenario, how is the business evolving over there? Because both in bimetal and Alcop, the incremental growth is likely to be contributed from US. So if you can share your thoughts as a starting question, sir.
You are right. Maybe in the month of September, there was little confusion about the business with USA because of the tariff and sanctions imposed by USA. But now the confusion is over. Most of the customers we are having, so far as USA is concerned for exports, our terms of supply are ex-works or FOB Mumbai. Maybe whatever business that we have started off, more than 2.5 additional crores of business with Allison USA, that is duty delivery paid, in respect of which the tariff will have to be paid first by us, 50%, which will be reimbursed to the extent of almost 10 to 12%. That calculation is being going on, considering their foreign trade zone, for which they get exemption on certain raw material inputs. So instead of 50%, we'll be having around, we'll have to consider about 10 to 12% of the total custom duty, but that business will continue without any issues. Similarly, is the position so far as Alcop is concerned. Mr. Aditya will tell more about that.
Just to make it more easier, with most of our customers, our terms of delivery is FOB Mumbai. So our responsibility is only till Mumbai. After that, the customers, their delivery partners do the delivery, they pay the duty. So we are not, affected that much. But like Mr. Arade said, like Allison, few customers where we have to deliver to the facilities in the US, where the tariff is, we have to pay the tariff, but these big companies are helping us, means they are helping us with the tariff. So imagine if 50% if we are paying, they are passing it on, right? They are also sharing the burden. So the full burden is not bared by us, just to make it in easier terms.
So if we assume a scenario where maybe, say in a couple of months' time, if the trade agreement with the US is reached, and if the tariff is reduced to say less than 20%, then is it fair to say that we will be on track to make about 20% plus EBITDA margins on that less than 20% tariff scenario at the consolidated level?
Yes.
Irrespective of whatever trade deal happens, we don't know about that. But I'm absolutely sure, considering the order book position which we are having at present, we will be reaching to more than 20% EBITDA margins this year.
And if the tariff falls, it should help us even more, right?
Secondly, sir, if you look at the second quarter, we have seen some decline in terms of EBITDA margins to less than 16%. So if you can share your thoughts, what led to this, and despite this, you are confident of achieving 20% EBITDA margins for FY26. Is that correct?
Yes.
Yes. I would like to begin with like first quarter of this year was the best quarter in Menon Bearings history. So if you compare the second quarter with last year's quarter, we still done better revenue wise. EBITDA margin is little lower because this year it's this second quarter very uncertain. So I don't want to say again, but the raw material prices were again high. So this time it didn't get passed on to us. So that benefit in the third and fourth quarter you will see. So this main reason why EBITDA to fall was because of raw material prices, which we had to bear. So the next third and fourth quarter, you will see a better, better trend for Menon Bearings and Menon
So in this quarter, we will be able to pass on that burden to them as per the pre-decided formula that will be scheduled.
And lastly, sir, on the railway business, we were supposed to get approvals, on the brakes business, we were supposed to get approvals from the railways, and we were awaiting the dynamometer to get that approval. So if you can share some updates on that, because there we are targeting about 100 crores of revenue, that's a big jump. So if you can share your thoughts, sir, and that would be my final question.
Yeah, we have actually, this second quarter was the planning, but there have been few technical delays. So maybe third quarter or fourth quarter, we'll get the dynamometer. Dynamometer, very complex equipment, not many manufacturers there in India. So the current manufacturer had some technical issues, and so as management team, we all are working on it. But as soon as it gets, we have done all the other railway registrations, and all the other audits have been conducted. But we are just still waiting for the dynamometer to come in. So we are being as transparent as possible. So as soon as the dynamometer is there, we should, the process will begin. But the next 2 quarters for even brakes, we will see a growth because we are expanding our product. We entered two-wheelers also now. So because railway is getting delayed, we're looking at other avenues to enter. So for two-wheeler pulsar bikes, we're doing brake pads. So that's another product we have started in. But as soon as railway comes, you will see a growth in the brakes division also. But currently, management, we are working on it. We're supposed to get it in the second quarter and third quarter, end of second to third quarter. But there have been some technical issues. So when technology is changing, we're trying to get one side railway, one side OE for the dynamometer. So we're still figuring that out. So as soon as that happens, you'll see we will as management update you on the same.
In the meantime, what we have done, we have started the business for Bajaj, that is for Pulsar, as he has already
Pulsar bikes.
Pulsar bikes, and eventually their requirement per month is around 5 to 6 lakh of pieces, which now we are supplying to the extent of 1 lakh, and gradually by the end of the year we will be reaching about 5 lakhs per month for brake pads to the Pulsar.
And just one last clarification. So if you look at revenue growth, there was some slowdown as compared to the first quarter. So is it that in the month of September, there was some slowdown in terms of revenue because of this uncertainty? And
yes, second quarter, actually, first quarter was the best quarter in Menon Bearings history. Second quarter, little bit uncertainty, even an order book. Before we had a little more positive forecast, but even all bigger companies, they also are in uncertainty, right? So a lot of export tariffs, and imagine for bearing is a small commodity, right? For average price 100 rupees. But for a big tractor, big, where our parts fit, their parts are even bigger. So 50% tariff for that. So these companies must have taken a more aggressive call. For Allison, we are paying the tariff because we have a big, long relation and we have to help them when they need us. And they're helping us with they are also taking the burden. But for bearing is small part. Piston is for 10,000 rupees, engine block is for even more. So bigger customers, other players, it's more tough for them to, go ahead with the tariff. So there's a lot of uncertainty in the market. But this October looking very good. Next quarter, you will see October.
Probably we will be recording highest sales ever in the history of Menon Bearings during this month.
October. 1 month, single month, highest ever. So the last 3 months was a little slower. than the first quarter. But
particularly in the month of September, apart from tariff confusion, people were waiting for the revision in GST also. That has also impacted the business of September.
Okay. Great, sir. All the very best, and thank you for taking my questions, sir.
yeah,
Oh, thank you very much.
Thank you, Bhargav. Sir, we'll take the next question from chat. It's from Ankur Tripathi. He's asking, Menon Bearings has set a sales target of 300 crore for FY26. With Q1 revenue at 67 crore and Q2 revenue around 62 crore, is the company on track to achieve this target?
As I already told you that we will be reaching between 285 to 290 crores during this year, 25-26, considering the order book position that we already have.
So his second question was about order book. What is the current order book, sir?
Current order book position is for this year it is 290 crores and for the next year it is 350 crores.
Thank you, sir. We'll take the next question from Sagar Shah. Please go ahead.
Thank you, sir, and thank you for the opportunity, and good afternoon, sir.
Yeah,
And
good.
congratulations for posting some decent set of numbers. Now, my first question was that you highlighted that one of the reason was this GST confusion actually, and that led to a weak September, and that led to something like a lower revenue offtake in this quarter as compared to sequential. And
Yeah,
but
GST along with tariff confusion.
Okay, tariff confusion. But my question was related to domestic front. On the domestic front, also we increased our capacity also actually. In the Q1, we had the ready new capacity also. So was there some sort of a delay from domestic customers regarding regarding the order offtake, sir? Was that sort of from Bajaj or some other customer? Was that also a reason?
No, that is not the only reason. Because of GST, the schedules were to some extent decreased, which has been compensated by this month.
Is how it is for us. They give us a 3 month rough forecast, like 8,000 pieces, 12,000 pieces, for example.
Right.
So in September, because of tariff, GST, we have a small part. They have to check their inventory with all the big parts, like one tractor or one engine has maybe, I don't know, 8,000, many, like X number of parts. So they had a little bit of confusion, little bit, it was a little pessimistic. The market was pessimistic.
Some part was different.
Yeah. So this quarter, they have shifted it to October. And like Mr. Arade said, October we are having the best month. Next quarter we'll of course give out the results, but October will be the best month ever in Menon Bearing history. So maybe September का थोड़ा उन्होंने October में delay किया. I don't know what the company's logic is, but this time forecast it was little lower than the forecast. This last one month and a half.
Okay, so is it safe to assume we'll be supplying to the Bajaj regularly 5 to 6 lakh pieces? We are in a position now with the new capacity on stream.
That will be so far as brakes, Menon brakes is concerned.
Yeah.
Okay.
We expect that by the end of this year,
okay,
we will be able to reach 5 to 6 lakh of pieces per month in brakes. So far as Bajaj is concerned.
And we just started the business 2 months ago. So even when we ramp up, we want to make sure, because they are replacing us with the existing customer of theirs because of our quality and better pricing. So we also make sure that we are doing sustainable growth, right? Just because 6 lakh order हम 6 lakh नहीं कर रहे, quality का issue हुआ, so they'll also have doubts with us. So we are doing a sustainable growth where we are a short replacement for the years to come.
Right. Makes sense. Yes. So what is the capacity utilization as on date for our all three segments? Can we please know?
That is around between 70 to 75%. Maybe in Alpha we are having greater capacity so far as foundry melting is concerned. Only what we have to do, that we have to increase the capacity so far as machines are concerned.
Right.
Matching the requirement of the customers.
Yeah. Because Alcop, we are doing very critical parts. So we're not investing in the machinery, like the machine shop yet. Because every machine requires 3 axis, 4 axis, 5 axis. So depending on the productivity, what kind of part job is going to fit on the machine, we get the machines. But for the foundry, where the melting and high pressure die casting is there, we have around 60% utilization. So 40% is still spare capacity is still there.
Okay, okay. So in the bimetals, the capacity is increased to 530. So is it safe to assume that 70% utilization, I think, won't be on the additional capacity that you had built, right? In
Yes,
this year?
yes. You see, on average from the last month, or particularly in this month onwards, additional quantity of 6 lakh has increased so far as production is concerned per month.
Okay, so basically the capacity will be utilized from in H2 actually, the new capacity of bimetals also,
Correct.
right?
Yes.
Okay, okay. Sure, sir. My next question, sir, was regarding to this progress of the 63 parts that have gone for approval. So basically, are those customers still basically wary of the tariff situation, or there is some kind of progress on the approvals also of these 63 parts of LCOP?
No, these alcohol parts are approved, but we are just like telling you, like saying some parts are FOB Mumbai. So export tariffs are not affected, but where tariffs have been applied to us, we are having healthy discussions with the customers. Because customer knows even what we are facing through. If someone is adding 50% tariff, customer hardly gives us 18-20% margin. So if someone is giving 50% tariff, so till what extent we are in negotiations, till what extent they are going to bear the tariff, like reimburse us with the tariff. So all that is in place. But from Q3, Q4, you will see rise in exports in Alcop too, because what all parts we have been submitted in the last year, the year before, they are getting startup businesses happening from Q3, Q4. So we are getting
that are out of that. So 63 parts that you are telling
Yes.
the supplies.
So
all the 63 parts are being productionized by the end of this quarter.
this
That
year,
fourth quarter.
yeah, third, fourth quarter already means we are getting forecast. So they also ramp it up. They also ramp it up.
Right.
Imagine 5,000 monthly है, तो इस month से हमको 1,000 to 1,000 का order आ रहे हैं. So we are now this last 2 quarters and next year we'll what do you say, bear the fruits of the labor we have done for the last 2 years developing these parts.
Exactly, because last 2 years you have been basically supplying these products for approval actually. That we have been hearing on the Concall.
Yes,
So
but this Q3, Q4, you will start seeing the growth in the revenue and margins.
So basically what has happened,
Okay.
all these parts are for exports. And we have to
Right.
send all these, the people, we have to send the samples to the USA at certain destinations. They are having many more destinations in USA also. So after we submit the samples to them, their team comes here for PPAP. Once they approve, then it is sent back for viability and feasibility and testing again.
Right.
And after that, it is a long process. As I already told you many times, that it takes almost 9 months to 1 year for testing of these samples.
Absolutely, sir.
And according to their projections and project, when they are going to start that particular project, they are releasing the schedules accordingly.
And even like for example, these new parts of our John Deere, Honeywell, they are not only from Menon Alcop, they are getting from many buyers from India. Because of this tariff confusions, maybe other players have held back. We are ready to support, but other customers, I don't know how much other suppliers, how readiness of theirs is. So if they don't have all the parts, they don't they just don't take our part and keep. Till the engine assemble nahi hota, wo ek part nahi lete. So little bit delay, confusion, it's just taking little bit of time. But Q3, Q4, we are already seeing a new product forecast coming in. So we as management are planning the production. We are also keeping readiness. जब उनको order आएंगे, so we should not be in a position that give us 3 months to supply. So we are also already starting the production and keeping it our end.
And this Allison contract of 2.5 crores per month, that has already started, or will start in October?
I'll just give you a basic idea. When we start a new business, it's called 3PL system. When you do any export, 3 months for at least in our what customers we have, 3 months of stock we have to keep in warehouse in their facility. Then now because of transit is to be 35 days before, it takes around 2 months now. So it's 5 months of the business billing will start in Jan Feb. But last 2 months we have already sent Allison the material. So when January when they start with switch to Menon bearings, so they have enough stock in their warehousing. So last month we have dispatched, October we are dispatching. So whenever December, Jan, whenever they decide to start the business, they will already have enough stock in the warehouse.
Okay, so at least we can see is on the 63
After that,
crores,
we
none
take
of the LSN revenues
the
are there.
earlier month.
Yeah, revenue is not come, but we have already sent our, what do you say, production has gone. Billing has not happened.
Samples.
Yes, samples. No, the first batch as such
Hmm.
has already left from Menon bearings. We manufactured, and the first 2 batches, in fact, have dispatched. So it takes around 45 days, 50 days to reach US. They will check, have it in the warehouse. And once they start billing, then it will happen. Like once you start taking the batches, then the billing will start happening from Jan Feb. So January, February, you see the revenue impact of the parts.
Okay, okay. So just regarding the margin guidance, actually, the margin guidance, the EBITDA margins that you clocked are around 15.6% for this quarter, which are at actually a record low, actually. So the cost impact that I'm largely seeing is not much of a because of gross margins, but because more it's related to your higher OPEX cost, especially other operating expenses. And I believe these expenses are because of the new capex that you had done last year of 30 crores. Is it safe to assume? Because I'm not seeing much of the impact of a gross margins. So is it safe to assume that operating, once you actually clock more revenues out of your existing new plant, that will be a driver of your incremental margins and not your gross margins?
You see what has happened actually during the last quarter. One thing is that input material costs have gone up along with the consumables which are considered in the other operating costs, right? And apart from that, salary, wages, etc., because of increase in the DA and because of increments and because of bonus and etc., that have also gone up during the last quarter. Apart from that, electricity rates have also gone up. So all those expenses will have to pass on that burden along with the raw material to the customers in the next quarter. That is from October onwards. So we'll be preparing the charts as to what were the average rates of these items during the first quarter and how much they have increased in the second quarter, and whatever increase is there on first quarter, that increase is being given by rise in the prices by the customer, and that benefit will accrue during this quarter, so that our EBITDA margins will go up drastically.
But like you said, when the new plants are also at a more optimum operating levels, these margins will be better. Because capex, what do you say? Getting the building machinery is one thing, but we at the same time have to get manpower. Like today's world, that also is an investment. So we have to prepare already. You don't get ready-made people like kal chahiye hai, to kal I can't go and hire one professional. So already we are starting hiring people for looking at the future. So that also is adding on. Like it's a combination of both.
Now what we are saying is also correct to the extent of certain extent. There is increase in the OPEX because of increasing the capex to the tune of almost 30 crores. So the fruits of which will be enjoyed by us by the end of this fourth quarter.
Like electricity unit rate also is increased. Plus, when you do a new plant, the basic electricity charge increases when the building is not 100%. It's basic operation cost also that, like you're saying.
Yes, that's what I was referring to, that those kind of cost when they are amortized actually over in the next 6 months, and when the revenue goes up, definitely that cost will be absorbed and we'll see higher margin. So can you guide us with the approximate EBITDA margin range for the entire year FY26, which you would be closing on, sir?
And for the entire year, it will be between 19% to 20%.
Okay. Fine, sir, fine. Thank you so much, and congratulations, and best of luck for the next week.
Thank you.
Thank you.
Thank you, Sagar. Sir, we have a question on the chat from Ankur Tripathi regarding the margins. He is also asking for your margin expectations for FY27, if you can guide.
FY27 margins are between what we have forecasted is more than 20%. Though the forecast is about 22% for the year 27, what we feel that on a conservative side, we should take it between 20 to 21% to be on conservative side.
Okay, sir. Thank you, sir.
Actually, my calculation is higher, but it's always better to be conservative.
Thank you. Thank you, sir. We'll take the next question from Kunal Tokas. Please go ahead. Yes, Kunal.
Okay. First question is, sir, you said the raw material costs increased. So can you give us a amount? What was the increase rate?
We see in the first quarter, if the rate of copper per kg was 745 to 775, which has gone up to 875 during September. And now in this October again, it has gone up to 940 rupees. Similarly, tin was almost 2,250, which has now gone up to 3,250. Steel rates are more or less constant, a little bit of increase of rupees 1 or 2 per kg.
Similarly, for aluminium, average price is around 205, 210.
190.
Yeah, 190, some alloys. So you can take around 200, 205, it's reached up to 245. So it's a significant increase. So now we are making charts where with our customers, where this last quarter where we have bed September, even October now. So we are sharing with them. So they are also discussing internally. So maybe third quarter or fourth quarter they'll pass the benefit back to us.
The reason I was asking was that I wanted to sort of find out what the contribution of price increase would be to this year's guidance of 270 to 280 crore rupees. So you already had a price hike in Q1 as well, and now you'll have another in Q2.
Yes, but what happens now? Q3, Q4 we will tell, and they'll reimburse for Q1, Q2. Then Q3, Q4 next year will get reimbursed. So there's a formula where the company will give us the price increase, because how we do our costing, the raw material price is counted in the company gives us the raw material price. The costing, how it works for a production, the raw material is it's we have to even give them how much margin we make to all our customers.
Yes, it is passed on.
Yeah.
But
So,
in volume terms, what would be the growth for FY26?
And I can see exactly volume. We cannot identify exactly what it can be. We are working out the same, and it will be completed.
Okay.
Exercise will be completed by the end of this month, and maybe about 15 days will require for that, and then the percentage will be about 5 to 6% that we are going to benefit from that.
Okay, got it, sir. And for what would the contribution of the brake segment be in FY26? Does that depend on getting the dynamometer on time?
Yes, so that is because of some technical matter that has been delayed to certain extent. Though the railways have already we are registered with railways, they are waiting for the dynamometer to come, and they will come for inspection and they will approve as a source, and we will start dispatching to them, supplies to them. But it may take little more time because of this delay in procuring of dynamometer, which is costly as good as 3 to 3.5 crores of rupees is the cost of that dynamometer. Along with that railways, our OEM business will also get into our fold after we install that.
Okay, so brakes, what would its contribution be to this year's top line?
Around 13 to 15 crore, like 13 to 14 crore.
15.
Yeah, depending how last 2 quarters go out.
You can say about 13 crores.
Yeah.
Okay. And for the brakes business again, when you have entered the two-wheeler business with Bajaj Pulsar, what value proposition are you sort of offering them to switch their vendor?
See, even if we go up to the extent of instead of 5 to 6 lakh their requirement, if we go up to say by the end of March we reach up to 4 lakh of pieces per month, that additional business will be around 80 to 85 lakh per month.
And actually this business value proposition means they are having troubles with the current supplier. So that's why they were looking for another supplier. That's how we got into the picture. So we have open orders, but like I told before to Mr. Shah, that we want to do a sustainable growth. Open order है इसलिए 2 लाख करके दिया, उसमें rejection आए, हमारा Menon brake का नाम खराब होगा, it's a safety product. So we are making sure our processes are bulletproof. We go with 0 ppm, do give timely delivery, timely order, and so actually now they have even given for their another model का part भी दिया है, because उनको quality और सब अच्छा लगा है. So as management deciding should we even invest in that. So
once we reach to the optimum level, you can say that monthly business will be around 1.30 to 1.5 crores a month. For that, we will have to have additional
capacity, of course. Yeah.
Okay. Got it, sir. And just last question, what are your plans for Africa and what is the sort of indicative timeline?
Indicative timeline is that from the month of December, we will be having a business of around 50 lakh of rupees per month to start with from December.
50. Which segment would it be?
So yearly impact will be around 6 crores in bimetal.
In bimetal. Okay. Got it, sir. Thank you very much and have a good day.
Thank you.
Thank you, Kunal. We'll take the next question from Arnav Sakhuja. Please go ahead.
Hi, thank you for taking my question. So my first question is, so in our PPT, you mentioned that there are some strategic investments that we've been doing from a cost saving perspective. So would it be possible to quantify, what kind of cost savings we could expect from these ventures in the next 1 or 2 years?
You see, only with the help of installation of rooftop solars, we'll be saving around 2 crores per year.
So that's one. Another, we are also doing an efficiency of toolings. We're getting more advanced toolings which are better life. So it's all operating efficiencies. We're trying to maximize those. So those also will, in long run, give us savings, increase our margins, operating margins also. So one was we have done around 10 to 11 crore investment in solars. All our rooftops are getting solar panels. One is for cost saving. Another one is all our customers are big customers where their company goals are to have a better carbon footprint on the world. So how we have quality, like, when you do a product, there's price, first they check the quality, then the price. Now they're getting a carbon sheet as well. So one main reason behind solar was to get carbon footprint approval also, because that's going to be a parameter for these big customers to choose between suppliers. For global customers for export, especially EU and US. So EU starting to have a carbon footprint on this big John Deere and all other customers. So if they don't fit the carbon footprint, there'll be extra taxes put on the like those parts.
If we implement it, we get better price.
Yeah, so we're getting better prices also. So that was one big reason why we went for solar also, a big investment.
Thanks. And so my next question is there any update on our business in the bimetal segment that we're doing with Canada?
Canada, that is, you see, because of certain uncertainty, because of tariff and all these things, the people there with a certain company with whom we can have better business. We cannot tell the name of that company, but what we have decided that I am going to have a meeting with them in the month of April, and that alone business will be to the tune of almost 50 to 60 crores per year. And they have already approved our pricing, etc., and quality as well. So how to take it forward, that we will decide in the month of April, when we will be meeting in the USA. They will come from Canada. I will go there from Kolhapur, from India, and will complete that deal by the end of April next year.
Just for better knowledge, many of the US companies have their manufacturing units in Canada also. So in the long run, just to be safer of the tariffs, they are trying to reroute us from Canada and Mexico also. So we're just working out how the costing, pricing, everything will work out.
And this would be in the after sales segment, right?
No, that is OEM.
OEM segment.
Okay, OEM segment. And just one last question. So you were mentioning earlier about some business from Africa. I didn't catch that number. Could you please repeat that number?
Actually, we have got few inquiries from few companies in Africa. So they have given big numbers. So we're planning to start with a small quantity first. That's 50 lakhs per month business for bimetal product.
Eventually that will increase.
Yeah, that will increase. We are just not skeptical. Just want to make sure the payment cycle, everything is on time. Because like back in the day, before I was born, we used to supply to few countries in Africa. So that time we had some bad debt situations there, where in 1930s, 1994, 96, where 30 lakhs, 40 lakh rupees, just we couldn't get the payment back. And what can you can't fight in international court, and it's all sounds fancy, but in reality, when you go to do it, it's very difficult. So we're starting with 50 lakhs per month. Eventually, that should go up, but we just want to make sure it's a good customer, everything going smoothly.
So when couple of days back, customer from South Africa was here. I already had a meeting with them, and I insisted upon them that we should get 100% payment in advance before the dispatch, and they were agreed for that.
Yeah.
Okay, sure. Thanks for answering my questions.
Thank you, Arnav.
Thank you, Arnav. Anybody who wishes to ask a question, please use the option of raise hand. We'll take the next question from Manav Mehta. Please go ahead.
Thank you for the opportunity, sir. So, sir, I see that this time you have excluded the slide on capacity expansion. Can you throw some light on the CapEx plan and where we are on CapEx that we have guided for division wise, that is bearings, brakes, and helicopter?
I like to answer. Last 2 years, we have done around 30 crore. Finished around 30 crore in capex total. So, like Mr. Aradhi said, we have already done the most of the capex. Now only whatever machinery is required, part specific. When the order is there, only that time we'll have to do. So in capex wise, 2026 is not much. Like it's not on a very higher side.
So whatever capex that we have done so far as bimetal division is concerned, we have incurred about 20 crores. In Alcop, 12.5 crores we have already incurred, and additional 8 crores is being incurred during this year. And in brakes, we already incurred cost to the extent of 9 crores and additional 3 crores on account of equipments for inspection that we are going to procure during this year.
And we won't need significant amount of capex till 2027 and half, first 2 quarters of 2028. So those revenue values we should be able to achieve with the current capex done in all the 3 plants, all the 3 divisions.
Okay, sir, great. And my another question is, what are you doing to mitigate risk from tariff slowdown? Since we saw some growth in Q1, but again the growth has softened in Q2.
As I already told you that during this month, our export to USA are highest in the history of Menon bearings, and that will continue further.
October.
Continue there hereafter also. We don't feel any issues we will have any with USA.
Okay, sir, great.
Thank
you.
Actually, it is on the rise.
Yeah.
Great, sir. Thank you and all the best.
Thank you.
Thank you, Manav. We'll take the next question from Sagar Shah. Please go ahead.
Thank you again for the opportunity, sir. My just 2 questions actually. The first question was on brakes business. Brakes business in this quarter also hardly it's hardly 1 or 2 crores of revenue that we have earned in this quarter. Actually 2.1 crores to be precise. To collectively H1 we have just clocked around 4 crores of business actually, and you have guided for almost 13 to 14 crores of business for this year. And you said that dynamometer will be coming in the third or maybe even the fourth quarter, and then the partnership with the railways will come in FY27. So first of all, this brakes this will be totally will this order will be totally led by Bajaj, or have you found out some new customers also for this business, sir?
See, apart from Bajaj, that will be eventually go up to 3 to 4 lakh of pieces per month. Apart from that business, we have finalized one deal for African countries so far as brake lining is concerned, and that will be around 50 lakh of rupees per month. And from next month, we will start that business.
Africa, okay. So that will be basically on the brakes business.
Aftermarket, yes. Merchant export.
Aftermarket merchant exports. Okay, fine, sir. So, my next question, sir, was related to the thrust washers actually. In the thrust washers business, means we have, I guess we have started the commercial production also. So,
Yes.
can you highlight some features about this business, about new customers that you have identified? What is the progress regarding that business? What is the commercial? What is the utilization in that capacity?
You see, we have increased the capacity by almost 7 lakh of pieces of washers per month apart from the existing facility.
Yes.
We have already started that business with Allison USA from the month of September. We have already shipped 2 consignments of washers to Allison USA. And the
Right.
total volume per year will be around 30 crores of rupees, apart from their existing business.
But that will be of a lower margins, no, sir, as compared to
Why?
our
Why?
bimetals.
Who said that that is lower margin?
Okay. No, I'm just asking, sir. That's
No,
all.
no.
No,
It's
no, absolutely not.
similar margin.
Okay, similar margins.
Yes.
Okay,
Yes.
fine.
And these are
And
confirm
just
orders. At the same time, our marketing team, like this quarter, last quarter, we are still having prospects. हम जब आपको
okay.
बोलते हैं those are confirm orders, there are still like
Mhm.
6-7 guys in, like, we are going ahead. Like, we have given sample pricing. They are coming here for audits. We are doing quality check. It's a big process. So we have to
Right,
get a
right.
vendor code. So those processes are going on. We are identifying new players to get, from 2027, 2028, what answers we should give you all also. So we have very aggressive marketing also happening, identifying new players. But for us, we are doing high margin. We don't go for any customer. We go for very lucrative business. So we're trying to
Right.
find good players who give us the good rates, where they're focusing on value addition, higher quality. We are not into mass production kind of. We're doing high volume, high value addition parts.
Right,
Apart,
sir.
apart from that, from one of the global companies into Menon into bearings, we have received as many as more than 800 samples for development
Hmm. Hmm.
from USA.
Right. Right.
We are skeptical about that. They want that entire uh, aftermarket should be looked after by us so far as USA is concerned.
And they're one of our big competitors. So we are in management is taking the decision. Should we go for it or no?
Right, sir. Right, sir.
It's very, it's a call from the management what they
So
what
the
they take.
total volume of that business is around 80 crores. But maybe some part of it we will start. Maybe to the tune of 8 to 10 crores yearly, we can accommodate that.
Right, sir. So my last question, sir, that is means that is there in your investor presentation, that you have basically developed some few components for one of your tractor clients actually, and 50% approval has already come, and these components actually the business is worth 55 crores. So is it a US based customer, or can you highlight about something like some
That is
things
domestic
about the
as well as exports, you see, for John Deere also and for escorts. And one of the
Okay.
projects of international tractors also, that is Peacock project, TMT is another project.
How it happens, Escort also is taken over by Kubota, like, there's joint venture. So there are some
Right.
models which they do for India, some models which they do for Africa, some models that go to Southeast Asia,
European countries.
European countries. So it's a mixed batch. So company is Escort Indian company, but they are, what do you say? Some parts go to the Indian make, some part go for the foreign make. So it's for TMTL international tractors. It's similar for all these tractor manufacturers. So it's a mixed bag.
Sure. I got your point. Thank you so much, sir, and all the best, sir. Thank you so much.
Thank you, Sagar. Yes.
Thank you, Sagar. Anybody who wishes to ask a question, please use the option of raise hand. Sir, since there are no further questions, would you like to give any closing comment?
Yes, with the hope that we should be growing at a rate of between 18 to 20% year on year, and we strongly feel about that. Maybe September was a little less, but we will cover up during this quarter as well as in the fourth quarter, and we'll see that we clock a turnover of more than 280 to 290 crores with EBITDA margins about 19 to 20, 18 to 20%. And similarly, we hope that margins in the next year will be more than 20%, and we are absolutely sure about that unless something drastically negative happens. And thank you for that. And also I request many of you to come and visit our plants. We are having 5 plants, 3 plants in Gokul Sirga MIDC and 2 plants in 5-star MIDC, that is Kagal. You are all welcome and thank you for joining us. And we look forward for your visit to our facilities in near future. Thank you, everybody.
Thank you to the management team and thank you to all the participants for joining on this call. This brings us to the end of this conference call. Thank you.
Thank you.